Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics on Thursday, March 11th, 2021, and certainly an exciting time in the financial markets, certainly in the silver world, which is why a true pleasure to be joined by one of my absolute favorites in silver and gold world. I hope you get an award one day for what you're doing, Ronan, because sure is impressive. Inspiring to me, and I know a lot of people benefit your research. So before we get started, it's a true pleasure to have you here today. How are you doing, sir?
Great, Chris. I'm very glad to be here. Thanks for asking me. And it was actually you maybe a year ago which got me more involved in silver when we first chatted.
Yeah.
I think it was in May of last year. So I have to admit that I was more specialized in researching gold until about 2 months ago, when I got a lot more exposure to the silver market with what's going on with silver. So you're one of the people who should really get an award, not me.
Well, I am honored if that is in any way the case. I guess before maybe we take a step back and cover what happened over the past 6 weeks, which I think maybe it'll take a little time, but I think we saw some historic events. Yet, with what you just said about getting into silver, I always found that once people understand the argument behind gold, if you like gold and then you dig into the incredible dynamics in silver, you almost have to like silver once you see what's really out there, right?
Yeah, well, from my perspective over the last 10, 11 years when I was researching the precious metals, I was always aware of the fact that historically both gold and silver were monetary metals. And some countries historically had a silver standard, some had a gold standard, some had a dual standard. And the fact that gold is more valuable and it's held by central banks seems to be something that in some ways distracts people from the fact that silver is a monetary metal as well. And from a Bullion Star research perspective, admittedly, I never did that much research about silver, although I did luckily do a piece about 3-4 years ago in 2017 about how many silver bars were stored in the London vaults, which then when I went to update that back in February, it was easy enough because I knew all of the names of the ETFs, although they had changed ownership, but it was quite easy to update the data in that way. But I think the silver squeeze movement is something that is very important. And the fact that it just emerged out of nowhere, really, after Wall Street bets, and it emerged rapidly, that was a bit of a shock. It took everyone by surprise. Because I remember in the 25th of January, looking at GameStop and AMC, and like everyone else, just looking at the share prices of those two going up and down. And then suddenly that same week, the silver squeeze started. I think it was like the 27th, 28th of January. I remember my boss, Torgny, who's now the chairman of Bullion Star, he contacted me and he said, have you started writing about silver squeeze? There's a guy who's posted a commentary at the bottom of one of your blogs asking for you to go on the video show, the Silver Squeeze AMA video series. So I had been looking at it in the at that exact time. So then later on, I jumped on that call with the guys from Silver Squeeze. I also went on that roundtable with yourself and all of the silver people on the Sunday. I think it was the beginning of February. So a lot of things were happening at the same time. And it really, since then, all of the blogs I've been writing about are about silver. And there's just such a depth of information available and such historic events that it's a great time, and it's a great honor to be able to be involved in this, which I think will go down in the history books.
Yeah, it's funny you mentioned that. That's just what I was thinking because, all right, I get it. The price of silver and the COMEX still hasn't moved much. But in the same way they made a movie about The Big Short and what was happening, it seems like when you can put in context what's happened over the past 6 weeks, that I think is pretty wild, even if it has not been reflected in the COMEX price. Would you say that where we're at in the silver saga, is it equivalent to that scene in The Big Short where the bonds started defaulting, yet the insurance price was not changing, leading up to the scene where the guy says, hey, oh, finally, yeah, you're going to adjust our marks now that you're short. The thing was already broken, but it just, because of the way markets are set up, is it similar to that where we're at now?
I think there's a lot of firefighting going on behind the scenes. And if you think about the fact that the prospectus of the iShares Silver Trust SLV and also the Aberdeen Standards Silver ETC, which is SIBR, both of those changed their prospectus wording back in the beginning of February. SLV said that they put in a risk factor disclaimer saying that the authorized participants of SLV may not have sufficient availability of silver to add to the trust. And then the SIV or prospectus, in a very kind of hilarious, but at the same time really shocking way, warned that there was an online campaign to get up banks and hedge funds. That's just crazy wording for something that's meant to be giving people exposure to the silver price. And they warned that there may be a temporary increase in the silver price. Like, that doesn't make any sense unless their vested interest is for not to allow that to happen. So you have prospectus changes behind the scenes. And then you have the LBMA in the last few days. They did something very interesting. They used to have a 1 month lag for reporting gold and silver in the vaults of London, which is the vaults of HSBC, JP Morgan, Brinks, Alchemist, Lomas. And so basically, say if it was the end of January, they will then reveal what the figures were at the end of December. So then it rolls on to February, and they should reveal what's going on at the end of January, which they did. But then a few days ago, they changed the reporting lag for silver to only 5 days, which means that they must be running scared, that they want to try and show that there are X amount. There's 34,000 tons in the London vaults, they claim. But about 27,000 tons of that is accounted for by ETFs, which they never mention. So I think it was very important that we highlighted the fact that like 85% of the silver in the London market is already sitting in ETFs, and that these guys changed their prospectuses. And the fact that the March silver contract is something like, there's about, 1,500 tons changing hands already, and it's day 10 or 11. So there are things going on behind the scenes, which could be analogous to what you mentioned about the scene in The Big Short, that the banks are definitely scared. And the fact that the CFTC and Rustin Benham came in on the 1st of February with his warning that they were actively looking at the silver market, and then the Janet Yellen had that Treasury call with the Fed and the CFTC. And I mean, they don't do that unless they're very worried about it. So basically, at the end of the day, circling around back to your point about silver versus gold, they're both monetary metals. And I think silver is the Achilles heel of the bullion bankers, because if the silver market, if they can't control it anymore and it goes off, that will trigger the same thing that happened in gold, and that will trigger the demise of the US dollar.
Yeah, very well put, especially what you mentioned with the CFTC, where it seems like damage control, because I'd love to get your comments on the whole Jeff Curry thing. It hit me where I'm like, gee, is this? Because I guess if I hadn't seen that CNBC clip, I mean, I made a video and then Bix made one and then a lot of people noticed it. I was thinking if I hadn't just happened to have this nitwit on in the background and catch, like, because some of the things just sounded so far out of left field, it just hit me. I'm like, I don't know, maybe he's been saying this stuff for years. And then as a couple of weeks went by, I realized this is the reason that none of these guys have ever talked about silver before, because when they do, I mean, they're leaving some big time fingerprints that are starting to get really obvious. But
I heard that comment from Jeff Curry. I think you sent it to me, the video. It didn't make any sense to me. Like, I think he specifically said that the SLV is shorting silver, but
You said the shorts are the ETFs.
So the ETFs, but ETFs are entities. They're trusts, and they got a sponsor and a trustee and a custodian. So I think he was talking in terms of the fact that the authorized participants who are involved in those ETFs are shorting silver. Is that your understanding?
Well, rather than guess at my understanding, which it was darn confusing to me, Ronan, based on what you brilliantly reported about changes in the middle of the night in SIVR, I'm assuming you didn't get an email alert. You probably had to go find this, but
I found it, yeah.
They actually put in a clause saying hedge funds and large banks with substantial short exposures to silver, if they even slipped it into the prospectus, is that inadvertent confirmation that before we go any further, at least in terms of I know there's folks that say it's conspiracy theory, that there's large short positions out there. Does this put that to rest, clear that up?
Yeah, I definitely think so. And also in the another blog I wrote more recently where it was about the CFTC and Clifford Chance, where Clifford Chance, the law firm who have a big branch in New York, and they're connected with the CFTC, they were talking about the fact that the CFTC was thinking about going after the retail Reddit people for attempted manipulation. And in the Clifford Chance piece, the article they wrote, they also seem to have inadvertently mentioned that the large bullion banks have a short interest. If you go to the bottom of that article, they were talking about how they would approach, how the CFTs should approach investigating both the retail market and an institutional market. And they, just above that, they mentioned, just above that video, they're talking about, it says like, let's see. So, yeah, they're saying, see the way it's in italics, it says selling aggressively to defend lower prices. Just up a few, it's up a little bit.
Yeah, right up here.
Yeah.
All right.
So they know that the bullion banks are selling aggressively to defend lower prices. And it also crystallizes what Ted Butler has been saying for years about the big shorts of silver on Wall Street. And the fact that the CFTC reports of the largest holders, you know, the big four banks, why don't they, if there's nothing to hide, why don't they list the identities of these banks? That's a pretty fundamental question.
Well, they want transparency, but not too much transparency. Yeah. Although, Ronan, you mentioned, correct me if I need to rephrase this, but it seemed like you were saying throughout your article, like, where the heck is Clifford Chance coming in out of left field? Did I catch that right?
Yeah, well, see, Clifford Chance is an international law firm, but it has its global headquarters in London, and it's one of the big Magic Circle, Big Six, Big Ten, whatever. But they're actually one of the bigger of those Magic Circle firms, and they're very well known in London. But the more I looked at it, the more I realized that they're very well known in New York, and that they have some big shots working for them who specialize in things to do with like investigations into price manipulation. So they've worked for defense counsel, so probably working for traders who have been accused, but also at the same time, they've got the expertise to work in conjunction with like the Department of Justice and the CFTC. So I think they wrote this article because they know that there's a potential investigation coming and they want to be affiliated with it. Like obviously they want to be maybe retained as part of the cases on one side or the other, and to make some revenue. And when I looked at the names of the people who'd written that article, there was two very senior guys. One is the Clifford Chance senior counsel in New York. One is a senior partner who's in charge of like all the other partners, and he also is a specialist in these type of investigations. So in his bio, it says that his team consists of people that are former US government prosecutors, former CFTC staff in enforcement. So like these guys used to work in the CFTC, now they work for Clifford Chance. So obviously that's not a kind of normal, there's not a lot of law firms that have that relationship. So they know something that we don't, because they wouldn't have written that article for no reason.
Ronan, my brilliant friend. By the way, can I ask you on the air? I've tried to behave myself. I get giddy thinking about your nickname that I love. Is it okay if we refer to you in a loving, playful way as Ronan the Destroyer, as I imagine?
Yeah, I actually didn't know that until you mentioned it a few days ago, but that's fine.
Yeah.
Because a lot of people used to joke with me over the years that my name sounds like Conan the Barbarian.
Yeah, well, I saw you had
Ronan the Destroyer.
We'll get some of those apes. I have tons of memes over here. Maybe I'll pull one up while we're going. So, Mr. the Destroyer, my question here, you mentioned Clifford Chance and conceivably maybe they're drumming up business. What would you say if I suggested that at least my interpretation here, they're going to have to give me a second. I'm going to stop the share for a second, but maybe I'll set that up as I scroll down. What would you say if Clifford Chance already appears in the SLV prospectus? They're already in there, and as we'll take a look in a second, I would think they're on the payroll. It looks like they're collecting some legal fees. Had you seen that? And here we go.
I didn't make the connection that until you pointed it out to me that Clifford Chance, they are the legal firm that's retained by the sponsor to provide a legal advice. So anytime that the prospectus is changed, they have to say that they think it makes sense because it gets filed with the SEC. But that shows more even the fact that it's a small club. It's a small club and we're not in it. Or maybe it's a big club and we're not in it. The fact that they are the counsel for the SLV, and they're also very much aligned with the CFTC. The SLV doesn't want the silver price to go up. So you can assume that their vested interests aren't aligned with the retail silver market.
Yeah, you would think so. It's like if you could get a banker to tell the truth. I mean, it seemed like if you summarize those changes in the prospectus, it's like, all right, the short squeeze coming. Here's how we're going to screw you as it's happening. And they wrote like a manual. You could do case studies at Wharton or Harvard. I mean, take a look at, Ronan. Okay, I don't have to speculate. I see the way you write here. You write like someone who's written a lot of articles and cares about whether people read them or not. Small paragraphs, headlines, bold, things that I learned in my, learning to write headlines, marketing copy. I mean, would you say it's safe to say that this paragraph, I challenge you to read one of these sentences. This was written to be as big and awkward and clunky and intimidating a paragraph possible. It's not designed for someone. Does not strike me as something designed for an investor to be able to clearly understand the risks and someone who's giving them a good deal. Do you agree with that?
Yeah, I remember in one of my previous jobs in my career, I was an investment manager for equities with Dimensional Fund Advisors, and they're actually in Austin. They got their headquarters in Austin now. And so at various times I was reading prospectuses. So I'm quite used to reading prospectuses and talking to the legal people that are involved in that and the interpretations. They make them quite vague so that they can reflect what the trust can do, but also that they can defend against other litigation. And they make them very complicated in general. I'm not talking about Dimensional Fund Advisors. Legal people always make things difficult because then they can spend weeks and weeks interpreting them and make money out of it. But yeah, SLV and GLD, the iShare, the Spider Gold Trust, are both very complicated. And it's very easy to lose your train of thought when you go through those things. And they just keep adding and adding bits and pieces to them. And it's just a minefield. But they're written in such a way that they don't want anyone to be able to understand it, and they want to be able to wiggle out of it if they need to do.
Yeah, well, certainly that does seem to be the case. But perhaps we'll come back to the future and with an outlook on how this plays out next. Seems like damage control. Seems like a lot of coincidences happening. Where does this stand now that, I guess we're still in the March delivery cycle? Seems like that, while it wasn't the big number on day one that people expected, seems like those amounts are adding up. Where does it stand today? And what do you see happening next?
Well, if you think about what a delivery is in COMEX, and this is something that only dawned on me when I looked at it in depth, delivery would suggest a truck and something moving, but that doesn't happen with a delivery on COMEX. Deliveries on COMEX are just warehouse warrants changing hands between the long contract holders and the short contract holders, the ones who so-called stand for delivery. So the shorts issue and the long stop. So that's why I have a issues and stops report. So basically the longs take title to a warrant for a silver bar or a gold bar that previously was held by a different title holder. So right now, all of the statistics about COMEX deliveries in silver in a particular month, that just means the warrants are changing hands. But it is true that if there's a big delivery month like 1,500 tons or 2,000 tons, that could mean that the warrants are now in stronger hands or in hands of institutions as opposed to bullion banks. But what really is critical is what happens after the warrants change hands. Does the metal start moving out of the vaults, or does it move from registered to just eligible, meaning it's taken off warrant? So the more metal is taken off warrant and moving to eligible, the better it is in terms of breaking the shorts, because the metal is then in like a long-term investment maybe. And then the step after that is actually withdrawal of metal from vaults. So you can see that in the third column of the daily silver stocks report. But it's important to remember that last year for gold, I think it was in April, the CME group who runs the COMEX sent a letter to the CFTC about position limit changes. But what they mentioned in one of the paragraphs was that they thought that around 50%, at least 50% of gold in eligible category has nothing to do with COMEX. It's just held there by holders who hold up that metal in the vaults. Because you have to realize these vaults, they want to be COMEX approved, but they're just normal vaults where people hold metal. And one of the rules of COMEX says that you have to, each vault has to on a daily basis say how much eligible silver or gold are in those vaults. All that means is that they have to say how many 1,000 ounce silver bars are in the vaults and how many kilo gold bars or 100 ounce gold bars are in the vaults. That could have nothing to do with COMEX, and in a lot of cases it has nothing to do with COMEX. So the more silver that leaves registered, the better for the future of price discovery. And the more silver that gets withdrawn from the vaults, the more it will shine a light that the bullion banks are panicking.
Yeah, Ronan, in fact, that's one of the questions I would love to ask you, because I've had a couple bullion dealers on in the past month. And especially in maybe the past 2 to 3 weeks, we've started hearing issues about the wholesale bars. And I called a bunch of dealers saying, hey, let's say I had some guy had $10 million ready to wire, but he wants his metal, immediately. If he's willing to pay a premium, can he get it? I mean, there were varying answers, but certainly that it is getting harder. And this was even dealers I was talking to who deal with wholesalers that have COMEX accounts. So let's say I call and I just have a ton of money, but I really want silver now. If if I wasn't even getting quoted with a price like, hey, you can have it, but it's a 50% premium or a 200% premium, I wasn't even given by any of those four I talked to. I know there's another dealer, Bob Coleman, has said that he can get bars at about a buck 25 over, but that's a pretty high premium for the 1,000-ounce bar. So isn't there a direct economic incentive on the table? There's an ARB on the board where, hey, if I'm willing to pay whatever it costs to get metal, why aren't these guys draining the COMEX, the wholesalers?
Well, that's a good question. Like, I remember looking at a video that Rick Rule was talking to Craig Hemp last week or 2 weeks ago, just before he retired, because I think Rick Rule is retiring now. And he said that the PSLV, Sprott Physical Silver Trust, had been buying silver in New York and Toronto, but then he said more recently we've gone to London. And I was wondering, like, why are they going to London? Does that indicate that there's just not silver available in New York? Why are they not going into the COMEX, assuming that they're not doing that? I remember something that Chris Powell mentioned about if entities try to go up against the COMEX and just take silver or gold, they'd get a visit, or they'd get an offer they couldn't refuse. You know, that's sort of a threat. So I don't know if these wholesalers also are just, they know that they just can't go up against the COMEX or the SEC or the US Treasury, because those entities are all powerful and they could make it very difficult for commercial wholesalers. But to me, it doesn't make any sense why large entities with a lot of firepower can't go in and buy whatever 500 tons of silver in contracts and just wait 3-4 weeks for delivery and take it out of the vaults. Which brings me to a point that you'd mentioned about some smaller investors who are trying to get silver through a contract on COMEX and then get it withdrawn. We're finding it difficult because the vaults were giving them the runaround, saying that, oh, you can't use UPS as a courier anymore, and then you have to use Brinks, and if you ring up Brinks, they don't answer your call, sort of stuff. Have you found more of those anecdotal incidents happening?
Can you say that last part again, please?
But have you seen more of those anecdotal stories about people who are trying to get delivery and withdraw a bar from the COMEX vault, and they came up against obstacles with the vault saying, oh, we don't use that courier UPS anymore, you have to use Brinks, and when you ring up Brinks won't return your call?
Yeah, I've had at least one or two people email me, that, I mean, not that they were backing up the truck, but, they had a couple contracts they were trying to get delivery of. And one fellow was making it sound like, they were like, oh, call this guy. Then you call that guy, wait an hour, hold for an hour. And so that, anecdotally, I will say I heard that. And actually, Ronan, along those lines, we have a critic in the crowd. Says, I think Chris is exaggerating the shortage. I'm not sure that I would agree with that, but in your expert opinion, I don't know. I've tried to bring on bullion dealers who are giving their factual opinion, but what do you say? Would you feel I'm exaggerating the conditions at all?
Well, there is always in the silver market globally, annually, you've got supply and demand. You got mine supply and recycling, and then you got all the demand factors, which are industrial and then investment demand and silverware, jewelry. So if you think about normally, at any given time, there's a billion ounces of supply per year, and there's around these big consultancies like the Metals Focus and Refinitiv, they have these supply demand tables. So you have demand that could be 1.1 billion ounces. So that's a deficit. So CPM Group used this equation called market surplus, which is total supply minus industrial demand, and they say that equals market surplus, which is basically investment demand on jewelry and stuff. So if one of the components, if the demand increases in one of the components, that knocks out the whole equation, because the industrial users have to compete for that with that silver, for that silver supply as well. So there's only a finite amount of silver supply, and there's always silver coming in, but it gets used up, or it gets put into ETFs, or it gets put into bars and coins. So there is right now a huge amount more of silver demand in the ETF and retail space than there previously was. So it's not an exaggeration to say that that's happening. On the retail side, we see there's still a huge demand for retail silver. And that's why we say the spot price doesn't make any sense. That's artificial, because the supply and demand physical equilibrium is suggesting a far higher price than $26 on COMEX. But we in Singapore in Bullion Star have a lot of access to various distributors and refineries, so mints, relationships with mints, and wholesalers like A-Mark and Dillon Gage. So, and we stock up and keep a large inventory purely exactly for these events, these times when there's a surge in demand, as happened in March and April with gold last year, and it happens now since February. So we've got a lot of silver from Heraeus. We have 1,000 ounce bars from Heraeus. We have LBMA good delivery as well. We've got a lot of other smaller bars from Heraeus, Meister, Perth Mint, Royal Canadian Mint. So even though that we have quite a big inventory, it's getting bought up all the time. So the very fact that the LBMA have rushed to put out their February London gold stocks now at the beginning of March suggests that they have something that they're trying to prove, that there is no shortage. Why would the LBMA do that if there wasn't something that they were worried about?
Well, that's the same question that I had. And Ronan, perhaps this is why you would have my vote for the Silver Hall of Fame. Maybe on a slight side note, I don't know if this is good or bad, that actually I'd been thinking about that for a while. There's someone who actually started building it, maybe crazy enough to let me get involved. So you would be one of my first nominees here, because in terms of just looking sheerly at the numbers, actually, let me take a step back here. You mentioned earlier how, yeah, we have the deliveries, metal hasn't left the building, but there's some gray area there, because you could say, all right, well, if metal is off of the building, yeah, certainly that'd be one thing. But we don't know, just because the delivery goes up or SLV goes up or down. I mean, if it's a lot of people who are hardcore silver bugs and they delivered it and they're leaving it in the vault, maybe I would say that's not the best place to leave it. But it's kind of hard to say just looking at the numbers, but we don't know the people who are holding it, what they may be doing. But certainly it seems like more and more to suggest that people are getting in a longer term perspective or are willing to dig their heels in a little bit. Is that fair to say?
Well, yeah, like you could go in COMEX, take delivery of silver and leave it in the vault, because if you did want to trade it in the future, if you leave it in the vault, it's still in the chain of integrity. If you take it out and you do want to trade it again in the future, it has to be brought back again, reassayed, and you have to pay for that. So I think that some institutions that could be holding silver for long-term investment purposes, they leave it in the COMEX vaults because they don't want to go through the trouble of curing it somewhere else and then bringing it back and reassaying it. But I think that if I was a large institution, I definitely wouldn't leave it in one of the bank vaults like HSBC or JP Morgan. I'd be more happy leaving it with, like, in Delaware or in maybe MTB, I was going to say, but now they've taken over the Scotia vault. I don't know if if the banks still have an influence over that. But one interesting thing, I don't know whether you might agree with this, silver can be held within 150 miles of New York, not just in New York. I think that's the same now with gold, but silver being more bulky and less valuable, it sometimes isn't held in vaults at all, it's held in warehouses. Because I remember HSBC had a warehouse in upstate New York, a place, it was something like Russian River. It was up in this place, which was in the middle of nowhere, and it was in a warehouse. Because it was
where they did the money laundering I read about in those articles, or?
I don't know. There was a warehouse. I remember afterwards, still HSBC left that warehouse, and the warehouse was on the market because it was actually on a real estate website on offer, and it was just an empty big warehouse. So silver doesn't necessarily have to be held in a vault in New York. So if some of these holders who think that their silver is being held in a vault in New York and they leave it there because of that, it might not necessarily be in New York at all. It might be outside New York in a warehouse somewhere. And the level of reporting that for COMEX vaults on the daily silver inventory report is very high level. They don't have to say where those vaults are. Like, for example, now MTV is saying that they had their own vault and now they got the Scotia vault. But all of that is rolled up into one. HSBC could have other places where they're storing silver and just report it as HSBC New York. So if you're holding long-term silver, I don't think there's any reason to hold it on a COMEX vault, apart from maybe a practical reason that you want to sell it again in the future.
Yeah, and Ronan, that leads into exactly what I think everybody's saying. Chris, would you just ask him already? Because there's probably few people in the world better than you to comment on this. Can you put in perspective what we know? And certainly maybe there's parts we don't know, but any comment you have with how much metal you see out there, you know, let's say how much longer can this go before the metal's just not there? I mean, if we have another big month in PSLV and with the bullion dealers, do you have any feel for how close it is to the point where, at least as far as we can see, it's just like, hey, they're running out now?
Well, like every month, more and more silver comes on the market from mines and recycling, but all of that is usually spoken for in terms of industrial users want silver. Like, say if there's 1 billion ounces per year coming into the market through mine and recycling, which is kind of the case. 500 million ounces of that are for industrial use. That's according to the World Silver Survey 2019-2020. So investment demand is one of the other big components. So that could be like 250 to 300 million ounces. So as investment demand gets bigger and bigger, it competes with industrial demand. And so every month there could be silver coming into London, which comes from places like Poland and Kazakhstan, and it's shipped in ships. So taking the LBMA figures, the latest figures as an example, they just said that between like December and January and February, they only got in maybe another 1,500 tons. So back in late January, early February, SLV they claimed they took in, they bought, or they got control of 3,400 tons. And that silver was already in the warehouses in Brinks and Malcolmit and Lomas in London. But a few more days of that, and I don't think that SLV could have found any more silver because it was going around the houses, so to speak. It was going around the vaults in London, adding silver from Brinks Premier Park in North London, Brinks Radius Park, Malcolmit beside Heathrow, Lomas beside Heathrow. And if that happened again at the same rate for 3 more days, they wouldn't have had enough silver. So I think that's why the bullion banks bombed the price on the Monday, the 1st of February. And it was very funny that on Tuesday, the 2nd of February, was Groundhog Day. And I just saw that because a guy in Reddit had a meme, and then I looked up Groundhog Day, and it was actually on Tuesday, the 2nd of February. It was exactly the same. They were doing it again, bashing the price, like they do every day. But I think that it's to do with what they call at the margin, demand at the margin. Supply isn't going to change, and demand is getting bigger. So something will have to break. So the silver squeeze on a retail basis flows through all the way to the refineries. Silver squeeze by buying PSLV flows through to the guys on the Sprott desk buying in Toronto, New York, and London. But Sprott needs to take delivery of that silver out of London and put it on ships and sail it back to, maybe not New York, it might get impounded, sail it back to Nova Scotia. Maybe this is a bank of Nova Scotia. Have to come in secretly at night through one of those channels into, where is it, Ottawa? Is there a river in Ottawa or Toronto?
Well, Ronan, if I may be as bold, I don't want to sound cocky here, but I think I may have figured it out. You wanted to hear a theory? It's definitely a conspiracy theory. But now I was up a little bit late last night having some fun. So I did miss this morning's CFTC meeting. Hopefully there's a replay of that. It sounds fun, but you did some great reporting, pointing out a whole sorts of unanswered questions by the CFTC. They also, I don't know if it was threatening people on social media or Reddit, where, I don't know, I do a show on YouTube. I talk a lot about silver. I didn't know if I'm supposed to take that as a threat. It's like, it's amazing. I'm trying to do the right thing, report a crime, and I feel like, am I getting in trouble here sometimes? So, but what would you say about the possibility, let's say the CFTC commissioners actually went to Wall Street Silver and read it. They were just taking a pure, unbiased attempt to uphold their own mission statement. Just wanted to learn about the customer side. You don't have to agree with people holding signs. They might be Fruit Loops, but just maybe they went here and researched, saw how they can pose questions here. Some guy was saying how much metal has left the COMEX. There were people commenting on the calculations. So what if the CFTC, when they finished their investigation, went here, posted, got some answers, or if they read your article, which laid it out pretty clearly? Do you think it's possible that maybe it'd be so obvious, the incredible dynamics, that some of the CFTC commissioners would be calling Bullion Star wanting to get silver so that they could not corner the market, but just invest, because it's so obvious of why that conspiracy, it showed in that prospectus that there's a large short position. So maybe if they saw all of that, even the CFTC commissioners might want to buy silver. What would you say about that possibility, Ronan?
I think it's not beyond the bounds of probability. We've always seen that regulators and governments and politicians are corrupt, in that they take the other side of a deal, or they front run to do, if they know of privileged information about a deal happening. And you can see that on share prices, where the volume spikes up a day or two before an announcement, so somebody knows and it leaks out. So it would probably be in the commercial interests of a CFTC commissioner to take the opposite side of what they're actually trying to prevent happening. Like they're trying to prevent a dam bursting of physical silver, because it would overwhelm the Wall Street shorts. So we could say that they claim they're going to be, they claim they're protecting the public interest, but it looks like they're protecting Wall Street. So even if they were protecting Wall Street, if they know that something is a foregone conclusion, they could take the other side. So I wouldn't be surprised if CFTC commissioners were, I can't really say that on air, but they could have a commercial interest in going long physical silver, because they might know that the days of artificial paper silver price.
Well, Ronan, let's not go getting crazy into any rabbit hole conspiracy theories. We don't want people driving their flying saucers home unsafely. Let's just stick to what is sheer documentable record. Could you explain who David Meister is and a little bit about his resume?
Well, yeah, David Meister is a lawyer by profession that worked for a company. Is it called? It begins with S. A legal firm.
Gadden.
Yeah. So he was previously working in what they call private practice in that law firm. I'm not sure if it was in DC or New York, but then he went to work for the CFTC and then was the head of enforcement, which means that he was involved in those investigations, so-called investigations by the CFTC into whether there was silver price manipulation. And then just in September of 2013, after 5 years, the CFTC announced that they were closing the investigation into silver manipulation, saying that they hadn't found enough evidence to do any prosecutions. And then about a week or two later, David Meister left the CFTC and returned to private practice, where he eventually became really quite quickly the head of the area that represents clients in these type of manipulation cases. And then he turns up as the guy representing, Michael Nowak, who was the JP Morgan head of precious metals trading at JP Morgan, who is now being prosecuted by the Department of Justice. So the guy who was head of the area that was investigating the CFTC in 2013 is now the guy who's defending the previous head of precious metals trading at JP Morgan. And the DOJ, Department of Justice, is accusing this precious metals trader and a few of his ex-colleagues of manipulating the silver price and gold for a long number of years, 8 years or more. And they are using the RICO Act, the Racketeering Act, against JP Morgan in this way. So it's very, even the guys who are prosecuting, I think so the US federal prosecutors even put in a plea to the judge in this case of Nowak, saying that Meister can't represent them because Meister has a conflict of interest. I'm not sure what the outcome of that is yet, of the whether he has to be stood down because he has a conflict of interest.
Ronan.
Small world. So you got Clifford Chance. We were saying that's a small world, SLV, and they're friends with the CFTC. And David Meister was at the CFTC. Now he's representing JP Morgan.
Ronan, especially since Gary Gensler, who didn't find anything during his investigation, is now head of the SEC. What do you think are the chances that he's interested in the data submission I made to the CFTC on February 12th, where I at least laid out the evidence I've found, which, I don't know, we've talked about a bit of it today, and I don't know, maybe is complete nonsense, or maybe there's a lot of clear evidence and proof of what's been going on. Do you think Gary Gensler at the SEC would be interested if I sent this to him, or what does one do if they have evidence in today's financial markets? So far, I've not found much interest from the regulators, shall we say.
Well, I think Gary Gensler would probably chuckle at it and send it to his friends. It wouldn't go anywhere after that. He'd probably use it as a talking point at his cocktail parties, but when the doors closed. Look, the name escapes me. Do you remember the CFTC commissioner, Bart Chilton, Bart, with the blonde hair? So Bart, I remember sending an email back to Bart Chilton, one of the first emails I ever sent to any central bank or anything to do with precious metals. I said to Bart Chilton, I says, back in, I think it was September 2011, I said, hello, Commissioner, dear Commissioner, looking forward to your statement. Because he had said the previous week he was going to say a statement about silver manipulation. And he responded that same day. I was surprised, and he says, hello, Ronan. He says, I hope they say something, or otherwise I will have to, meaning the other commissioners. But they didn't say anything, and he didn't say anything then, eventually. But at least he was more amenable to talking to the likes of us. So I think that the CFTC needs a commissioner like that, someone who's open to discussion and dialogue. But I'm not sure whether the current crop of 5 CFTC commissioners has anyone like that. Do you think?
It's not looking good so far. And Ronan, have you ever heard this interview I did with Bart Chilton about a month before he passed away, which about 2 years ago from now?
No, but I'll have to look at it now later on today, because seemed like a decent guy.
Ronan, I want to be respectful to your business. Can I hire you to write an article? Get paid to watch this video, write an article. I think you would love it. He confirmed, amongst other things, he confirmed that he thought things were wrong. I love that you mentioned the email. I emailed him in 2011 too, and he wrote something similar to the effect of, hey, it takes 3 out of 5 commissioners to vote, and you can look at what I've commented. I'm doing what I can. He was saying as blatantly as possible it was a rigged deal. In this interview, he describes that Bear Stearns did take over, or JP Morgan did take over Bear Stearns' short position. He also even mentions that the other commissioners started blocking emails when people would send in evidence. He says, in his words, he was disappointed. Oh, Destroy, you're going to love this. I can't.
He had to be diplomatic in the way he phrased things, because he's also cognizant of the fact that he couldn't say anything that maybe he gets sued for, because the CFTC could push out someone who wasn't playing ball.
That's what I thought, and I almost talked myself out of talking with him, but we'll pull up a random time clip, see what he says here. I can't wait. Oh my God, I can't wait for you to hear this.
Bottom line is we found a lot of things that indicated things were not okay. And I talked about that a little bit.
Let's go back.
And for folks who might be a little bit newer to it,
go back 45 seconds.
And the market, which sort of shocked people, and it shocked me, quite frankly, that it was so large. So anyway, the comment about how large a particular bank was in the market, which sort of shocked people, and it shocked me, quite frankly, that it was so large. So anyway, these were very troubling times, and a lot of this was going on then, the accused manipulation, and it was a really time certain period at which our investigators were looking at market participants, including those at that institution that had such large positions, to ensure that everything was okay. And the bottom line is we found a lot of things that indicated things were not okay. And I talked about that a little bit.
Yeah. So I'll send you the link. I'd love to hear your thoughts. But I mean, here's my question. For these guys to make it sound like they didn't find anything, and then, Bart says this years later, I'm not a lawyer, but doesn't that feel kind of like justice was obstructed somewhere in there? I mean, Bart clearly is giving a very different perspective to someone trying to understand the silver market than what this investigation shared.
Well, yeah, I'd agree totally with that. But governments are corrupt, and they're not in the business of telling the truth. And if they want to cover something up that is in the strategic interests of the United States, they have to do that. And they know that they've got immunity, because the fact that they're lying about this is in the strategic interests of the United States, the national security interests. So they can continue doing that, knowing that nothing's going to happen. Because silver as a monetary metal, it's not in the interests of the United States that the silver price goes up, because then the gold price will go up, and then that will blow up the US dollar and the reserve currency status of the US dollar.
Well, it seems like anybody can see that except for the CFTC, which is baffling. But Ronan,
if you think, sorry, I was just going to crack a quick joke. Well,
Please, yes.
Well, the fact that the internet address of the CFTC is .gov, the URL, that should say it all, .gov.
Maybe we'll just leave a sign up in case they're watching. Two last quick ones before we let you get back to doing the great research. I think in the same way people remember Woodward and Bernstein, I think given the context of this situation, maybe people think I'm exaggerating. That's how I feel about what the destroyer has done, really for your life, but especially you've just stepped up to the championship level recently. First one. Has anybody ever redeemed a share of an SLV basket? I would assume those are the same banks that you'd be duking it out with to get metal off the COMEX. Do you know, has anyone successfully, like some investor said, hey, I want to take physical metal? Has anyone done that? It would seem like the same banks and it wouldn't probably be much easier, but what do you think?
I don't think they have, because it's not really structured or allowed in the SLV. Same with the GLD, Spider Gold Trust. There is no facility to do that directly. But what they could do is do a side deal with a bullion bank, who are one of the APs, saying, collect enough shares, transfer them to say, sell these shares, or not sell the shares, convert these shares into, convert this basket of shares into silver bullion or gold bullion. But that would be a side deal. That wouldn't be anything to do with the trust. So I could go with whatever, 50,000 shares or whatever it is, and approach a bullion bank and say, I've got these shares, I want silver. So they could in some way do a roundabout allocation of 50,000 shares worth of unallocated silver into allocated and then put that in the vault for me. But that has nothing to do with the trust. So I don't think anyone can go and convert shares of SLV or GLD into metal, except the APs.
Right.
Yeah.
But I mean, look at who we're counting on there, which I would imagine is the same groups that people would be concerned about on the COMEX.
It's the usual suspects.
Yes, indeed they are. And last one for you. In the past couple of weeks, we heard Jeff Christian of CPM Group and Rick Rule of Sprott, one of the largest people to actually buy silver, both reference a cash settle rather on the COMEX. And as I've been thinking about it, tell me if this sounds correct or not, where let's say that on some level, I mean, it seems like the debt and the money printing can never be repaid, right? It's just beyond impossible at this point.
Yeah, like the U.S. government.
Any of these governments. But
yeah.
So if we accept that eventually this is headed towards some sort of reset, whether planned or market induced, isn't it possible that given that the COMEX, when these guys say the COMEX isn't going to fail, I'm paying attention a little more closely now. I'm saying, all right, that doesn't mean they don't think silver is going to go up. I think they're telling you that they can just change the rules and cash settle or whatever they do, which, okay, I'd agree with that. But in what happens to physical in that scenario, if they say we can't deliver it, and just one more add on to there, and then I'll let you take it away. Couldn't you actually have the scenario where let's say the governments wanted to inflate? Isn't it in their best interest to do a cash settle on the COMEX? That way, let's say you wanted to, they really wanted to get silly because the higher the number of gold, the more debt they can inflate. Say they wanted an 8-to-1 ratio and they did $25,000 silver and $200,000 gold. Or if you want bigger or smaller numbers, you put whatever numbers you want. But they're actually the higher the number, the more debt that gets wiped out. But you don't have this idea that the whole world has to collapse. The banks wouldn't have a loss. They'd be cash settling to $27 silver. If they have any big loss from that, the Fed could print that up. You could actually, it's not only could you have this happen without the world really being that impact or anyone besides you or I, the people like watch stuff like this noticing. But what intrigues me is that it's almost in the banks' best interest if they're really caught to do something like that? So that's the last question, and thank you. And any thoughts on that?
Well, yeah, I think the definition of a failure or a default in COMEX is if they can't deliver physical. So they could say that changing the rule to cash settlement isn't a default or a failure. They might think that, but everyone else is going to say it is a default or a failure. I know that in their rules they have this force majeure, and you can read the rule book, try and interpret the clauses. But anyone on the street, like Corey Keller, he's a gold refinery guy. William Starr interviewed him a few months ago. I saw him on Twitter saying that he said, like, a failure to deliver on COMEX is a default. Failure to deliver metal, if you cash settle, that's it. It's like playing Monopoly and then changing the rules in the middle of the game. But so the CFTC and the authorities and CME Group could change the rules, but and settle the bank. So are you saying that they could let the physical price skyrocket, or that they could allow the price on COMEX to skyrocket? Because my understanding is that if there was a divergence between the physical price and the COMEX LBMA price, those prices sort of go to zero because they're not backed by anything, while the physical prices that are traded elsewhere skyrocket. So that's a little bit unclear of Chris about. Are you saying that the government will inflate the gold and silver prices so as to be able to inflate away those debts?
I'm saying my understanding, it's been about 10 years since I actually did once go through the COMEX contract. I know David Morgan does it regularly. The understanding is the way it's worded, that's not even technically, they wouldn't even be defaulting or face a lawsuit if they said, hey, it's in the rules, we're giving you, I don't know, maybe it wouldn't go to zero. I mean, who knows? Maybe they do that. But what Jeff Christian and Rick Rule alluded to was cash settling. So let's say they wanted to plan a reset over the weekend, since Ides of March is coming up on Monday, and there's so many exciting occultist things that they'd like to do on the debt jubilee. Like, Ides of March was when they launched QE last year on that Sunday night. But we'll leave that aside. Just if you have the ability to cash settle, let's say they wanted to roll that out for Ides of March surprise. They could say the price is on Friday, tomorrow closed at $27.
Yeah.
So the banks can legally say, hey, we decided for whatever reason, because that's what the COMEX does, we're going to cash settle you to $27. Physical could trade wherever physical could trade. The banks are not facing a loss because they're cash settling. Maybe if they have an open loss right now today that has not been recognized, Ted Butler calculates however many billion it is, but that's a call to the Fed. They want to do QE anyway. Hey, for the risk of the banking system, we had to do bailout. So maybe they have some loss, but then the physical price, in fact, the way I read what's happening on the COMEX, it seems like a lot of dirty tricks to get out of any short position and get any physical before. I don't know if we're before the final takeoff, but the way I read the things that I see happening are people are doing anything possible to get out of short positions and own metal.
Well, yeah, like the big shorts, like JP Morgan, assuming they are one of the big shorts, they're so intrinsically involved in the New York Fed that they will not suffer a loss no matter what happens. If they have to get out of a short position, they will be settled by the Fed and the Treasury. So it could happen that the scenario you're mentioning goes into play, but what does that say for the physical price? The physical price will obviously skyrocket because it will have been seen that the whole COMEX is a casino that wasn't playing by the rules.
I mean, when you just listen to what Jeff Christian or Rick said, that's not, I don't know that they know exactly what's going to happen, but it was interesting. I slowed down Jeff Christian when he said, he's like, the people who talk about the conspiracy theories, they act as if the price is going to blow up and the COMEX is going to default. So he says that. So let's say if you broke that statement in as one, price blows up, two, COMEX defaults. Then he says, well, first of all, the COMEX isn't going to default because they can cash settle or resolve it in another way, which
it's just but words.
Just 1 second, Ronan.
Yeah.
Just the idea that when he said it could blow up and the COMEX could default, and then he gives the explanation, he only explained part two, the COMEX defaulting. And the explanation was that they can cash settle. He didn't say anything about it not blowing up or the price not going higher. In fact, even when he talks about the long term, he talks about he thinks silver is pretty undervalued. So it just seemed odd to see two people with, great access all of a sudden out of left field at the same time talking about cash settle to me.
Well, I would say the cash settle is a default. So would anyone on the street if you interview them. But they can mince words and say that that's not what the definition means.
Well, whatever they call it, I have a feeling that probably, maybe unless there's some JP Morgan employees watching, everybody else would be happy, whatever they call it, as long as silver price is a bit higher. So Ronan, I have a feeling in whatever happens coming up next, you'll be one of the good guys out there. Can you let folks know how's the best way to follow what you're doing, support what you're doing? We send kids to school, try and teach them ideals. I really think you are a role model for things you stand up and say along with your brilliant mind. So how can people best find and support great Ronan Manly the Destroyer?
Well, to follow my articles and writings, you go to the website bullionstar.com. That's www.bullionstar.com. And all of the articles are under the menu option, Bullion Star Research, along with all of the chart data and product and vault offerings. I've also recently started a Reddit account, which is popular, and I put posting things to the Wall Street Silver group in Reddit mostly. And we also, Bullion Star has a Twitter account, it's @BullionStar, and we also have a Telegram account now, which is starting to get a lot of traction. It has over 1,000 members now. So they're just some of the ways. You can also look in Instagram and Facebook. We have pages there also.
Is that Bullion Star here? Is that you when we see?
Yeah, it can be other people, but it's me most of the time. And we also have, I was going to mention quickly, the Bullion Star Video Perspective series, where I interview people. We've been doing that. We did that back in last year, September to December, but we're starting that again soon. And I hope to be interviewing
CFTC commissioners.
Sorry?
The CFTC commissioners?
Well, maybe if they were willing. I'm going to interview a guy called Michael DiRenzo of the Silver Institute. That should be interesting.
I met Mike.
David Morgan, who you know, and I'd like to interview Keith Nehemiah. Now that we're talking about silver, I know he's busy, but maybe you can put a word in with Keith.
I would be happy to introduce y'all. I have a feeling Keith probably wants the Ronan the Destroyer silver action figurine, which I'm going to not go on too long because obviously we need to get that in production today.
Can we make it into an NFT, non-fungible token, and we'll sell it for millions on the website?
Ronan, I'm going to have my people call your people, and whatever the Destroyer needs in silver, I'm going to make it happen. Actually,
it should be in real silver. It shouldn't be a digital.
No COMEX hedges. I was bragging in the chat while you were talking at one point that, did I catch right? You said that, I mean, you're already brilliant, but did I officially got you hooked on silver into the mania? I can put that on my resume at some point.
Yeah.
Yes. Well, that is pretty awesome. Ronan, one last note before you wrap up. Today's video was kindly brought to us by Van Gold. 60% silver, 40% gold, which is pretty sweet. Eric Sprott just became a new shareholder yesterday, and again, not licensed financial advice, but we have a couple videos covering that story, which will be coming up for folks later today. Obviously, always a lot of interest what Eric is doing. So thank you to Van Gold that has a nice investment and profile. It's done quite well. See, it's interesting. They've done, especially when gold was flat or down, they've done well, which by all means, people can consult your financial guidance and advisors. But we'll be covering that story. And thank you to Van Gold. And also thank you again to Ronan the Great Manly. I mean, I apologize I don't get these often enough. Please come back soon. People love hearing you.
Yeah, it's great to be on the show again, Chris. It was last May, so we needed to do this because you were asking for a while, so now it's happened.
Yeah, well, I will look forward to that again. Thank you, sir. And everybody at home, go have a wonderful afternoon. We'll be back with some coverage of Van Gold and any other silver developments that happen in the rest of the day. And I'll see you soon.